We're looking at some of the factors that have contributed to perhaps the tapering off, as I alluded to earlier. But at the end of the day, we're slightly below 50, which is, we're still in contraction mode, but 1 point away from growth.
Absolutely. Generally speaking, the survey presents very good news with one or two exceptions. We're headed in the right direction. There's a strong momentum towards improved performance in the future, but this is not a guaranteed outcome, and a lot has to be done to sustain that. It would have been more pleasing to have breached the 50 level in January, but 49 is as close as can be, and we are fairly confident that we will breach the 50 level in February. And we see within the survey that there is momentum for that, particularly within the new orders numbers, which have increased dramatically.
Exactly, the new orders numbers, if we just drill into those numbers, 43 in December, we're sitting now at 52, and sales volumes also increasing dramatically from 47 to 50. So we are starting to see that momentum kick up.
Absolutely. I think December was something of a disappointment within the trade environment. We've seen that expectations were not met during December, and although we've seen that January brings better numbers, better tidings, the January figures have not surpassed the November 2010 figures yet. So we hope that the momentum is maintained so that February does succeed in getting beyond the November 2010.
Don't things really start picking up though towards the end of January and February when it comes to trade, and things start slowing off in December? Isn't that a normal trend that we do see?
Yes, on the retail sales front, there's generally an uptick in December, a substantial uptick. But in the other components of the trade survey, you're quite right, there is muted performance, and that generally brings the entire survey down. But this time around, we're also seeing a slight disappointment in terms of expectations. December wasn't as great a month as the broader trade environment expected. And we believe that this is partly due to expectations being slightly unrealistic, but also due to the economic recovery not being supportive of better trade activity at this time, and consumers still being very cautious.
Well, let's touch on the trade activity index, the sub-index input prices, which have also increased from 56 to 63, and that's no surprise because we're seeing it coming through in the manufacturing side of things as well, and input prices globally, in fact, are ticking up.
Definitely so. If one looks at the pricing components holistically, we identify some pricing pressures building up, some inflationary pressures building up on a lower level. There's no indication that when one looks 6 months into the future, the trade expectations index looks 6 months into the future, that trend will be reversed. So when we do experience some inflationary pressures in current times, it's likely to be sustained for much of the year. But it won't be dramatic inflationary pressures that we experience. It won't be us seeing levels outside of the inflationary target range. It will be just a greater level than we're currently experiencing.
Well, let's look at the trade expectations index and looking at the import prices there. So the input prices rather, looking at what people are expecting, we're sitting at around 75, and that's staying flat. So there's no real expectation for a massive increase.
No, there
on the
isn't.
Input price front. Perhaps that's going to change going forward.
Potentially so. The level is currently very high, and it was quite unusual to see that this high level was sustained across 2 months, December and January. Generally speaking, when one sees such high levels in the index, they take a direction in the next month, and this time it didn't happen. It was sustained at 75. So those inflationary pressures that we identify in the coming months are likely to remain through to the midpoint of this year, which is where the trade expectation index looks.
And then looking at the inventory levels as well, when you look at the trade activity index and the trade expectation index as well, that's also just showing a slight tick up there. When can we really see a full recovery coming through on the inventory front?
I think towards the latter portion of the year, more strongly, between now and the midpoint of this year, we expect to see volatility on that side. I think if there's any strongly positive trend on a sustainable basis, it will only be later in 2011.
Right, so unemployment is a very big issue right now. We had the fourth quarter unemployment number out yesterday, 24%, down from 25.3%. When you look at the employment sub-index here, we're looking at 44 in December and 47 in January. So a slight tick up there. So it's looking slightly better. And then from the expectation side of things, it goes just above the 50 level. So a bit of growth there. This in the backdrop of the State of the Nation address being held tomorrow. Anything in particular that you're looking out for?
Well, on the employment side, we're looking for greater clarity in terms of how government plans to support a more competitive workforce. That is a key issue for business. We're looking for greater clarity on issues relating to our competitiveness vis-a-vis other emerging markets, and in relation to BRICS, we need to seriously think about our strategy in that regard. We're looking for clarity on the policy direction. Naturally, we're currently all obsessed with the batch of labour legislation out for comment, and we're engaging actively on that. But a longer term policy direction is required, particularly in terms of matching productivity and employment targets. So it's not just greater employment that we have to strive for, but it's also a matching of those greater levels of employment with greater levels of productivity. And that is a challenge that has eluded us for a long time.